What's going on today? I want to talk about the stock market and this horrible crash that happened today. I'm going to give you 7 reasons why the stock market appears to be dying. I'm going to talk to you about what Jeremy Grantham had to say about the market and why he feels that this is the worst bubble of all time. And then at the end of the video, I'm going to talk to you about a stock that I really like and that I'm actually invested in. I doubled down on my investment right when I saw the market decline. So get comfortable, buckle up a seatbelt. We're going to get started on the Black Financial Channel right now. Hey, what's going on, guys? Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins. I'm your friendly neighborhood finance professor. On the Black Financial Channel, we seek understanding and economic intelligence under the B1 philosophy. B1 means black first. Black first means that everything I talk about is related to black people. It doesn't mean you can't be here if you're not black. It just means that we put our people first. B1 also means we educate our kids. B1 means we teach our children about wealth. B1 means we prepare for the future because we refuse to be victims. B1 means that black people are going to position ourselves to win. If you agree with this philosophy, put a hashtag B and the number one in the chat. Hashtag B1. What's up to all my B1 folks? Rosemario and Allahu and Andre and Stevie and Elma. I see you. Elma is my late grandmother's name, so I love that name a lot. I got an auntie named Elma also. And also shout out the name of your city so we know what city you guys are coming from. So as you shout out your cities, I'd like to ask you all a question. How many of you got your butt kicked in the market today? How many of you are feeling a little bit hurt, a little bit sad today, a little bit worried, a little bit confused, a little bit uncomfortable with what's happening in the market? Give me a yes in the chat if your stocks kind of took a beating today, because today was just an ugly day. Oh God, it was messy, big messy. Yeah, well, days like this happen. Like New Edition says, storms will come. This we know for sure. This we know for sure. But tell me, baby, can you stand the rain? But right now it is raining. It says right here on CNBC, the Dow dropped about 1,100 points for its biggest decline since 2020 as the sell-off of this year on Wall Street continues. I think that the Dow's gone down for 7 straight weeks. So it's 7 straight weeks of bad news that you've gotten. This has been pretty ugly, and I know that it's painful to watch, and it's hard to watch, and it's like watching a freaking horror story. So what I'm going to do is I'm going to give you 7 factors that I'm seeing right now in terms of what's really driving this market and what's hurting this economy, and the things that are going to really cause you to have a little bit of discomfort as time goes on. And before I go on, please hit the thumbs up button. Thumbs up, thumbs up, thumbs up, share, subscribe. Also, I want to remind everybody, if you want to become the perfect investor, we are hosting the Black Wealth Summit in July 1st through the 3rd in New Orleans at the same time as the Essence Music Fest. I've gathered with Julian Gordon, a real estate expert, Lene Javette, an expert on entrepreneurship. I'm going to be there doing stocks. My wife will cover relationships. My brother Lawrence is going to cover generational wealth. We're going to be there 3 days, all during the Essence Fest. So you can come down and party at the Essence and go to the concerts and have a good time, but also you can come there and learn and grow and get stronger and become the perfect investor. That's what I'm going to train you how to do. So feel free to go to boycewatkins.com, look at the link at the top, and you can get a discount on the passes for the next 48 hours. So come on down to the Essence and have fun with us at that time. Now, with that said, let's move on. So here are 7 factors that I believe are driving the stock market volatility. 7 factors that, if they get worse, could worsen the condition. Right now, what is happening is the stock market is like your little cousin that just went to the hospital. So little Pookie got shot, or little Pookie's sick, or whatever it is, whatever scenario you want to imagine. So I'm the financial doctor that's basically saying, we got your son, your cousin in surgery, and here's what's going on, and we're watching them very closely because these are the conditions that, if they get worse, they could cause things to actually get worse. So in the stock market, you got a few factors. Number one, you got the war in Ukraine and Russia. Any sort of geopolitical conflict tends to cause volatility in markets because it creates uncertainty. It also creates a lot of problems in terms of the supply of commodities. So the price of oil has been hit heavy by what's going on in Russia. You've got economic warfare that is always even heavier than what's going on with tanks and guns, but you've also got everything from technological warfare to economic warfare. So that war, if it gets worse, that's going to hammer your stocks even more. If it gets better, it could lead to a boost. Number two, China has a COVID issue. China has this belief that they can contain COVID and have 0 cases. I think that's crazy. I think that's stupid. That doesn't make any sense. But China believes that. So China believes whatever it's going to believe. Well, if that gets worse, then what happens is China is unable to feed the world and supply the world the way that they do at the level that they were doing before. That causes a further economic slowdown. But if they get past the COVID thing, or if they release that policy, on this 0 COVID fantasy, then you might see China actually start to do well, which will actually boost the economy. Number three, the Federal Reserve has gone from being your greatest ally to being your worst enemy. Imagine your best friend who had your back, who supported you, who would help you even pay the rent if you asked them to. And then imagine if that person suddenly became your enemy. So instead of giving you money, they're taking away money. Instead of helping you, they're hurting you. Instead of being your ally, they're stalking you to try to take you down. Well, that's kind of what the Fed is doing. The Fed created a bubble unlike anything that we've seen in at least 20 or 30 years. I mean, the Fed, in fact, this is something we've never seen throughout economic history in the United States. I'm not even going to say the last 20, 30 years because I'm actually going to compare it to the tech bubble in a minute. The tech bubble occurred around the year 2000. I'm going to talk about that in a second. But really, I don't think they've seen anything like this in a while since the Great Depression. The Fed just really went overboard in terms of pumping up the economy unnecessarily. Now you're paying a price for that. So now the Fed is not only taking away everything that they've given, they're actually taking away things that they didn't give you. they're not just slowing down the quantitative boost. They're not just slowing down the boost. They are actually deflating the economy. They're taking air out of the economy. So this is going to be bad. This is when your stocks are really going to hit a price that's more realistic anyway, without the prop up of the Fed. So that stock that went from I don't know $300 to $100, and you're thinking it's a great deal. Well, that stock might drop to 50. Okay, so just be ready for that. Just be ready for the fact that it could be a pain in the butt. And when I give you the stock that I like at the end of this video, I want you to know for sure I am a long-term investor. I go Warren Buffett style. I'm looking at 5 years down the line, at least 3 years, preferably 5 to 10 years. I'm not talking about a stock that's going to do well this year. I'm talking about a stock that will do well by the year 2027. That's how you build wealth. You build wealth through long-term investing, not short-term rolling the dice. And you see what rolling the dice has done. A lot of people are going broke right now. They're getting hammered right now because they were betting on low quality assets. Those are the ones that die first. So let me keep going. Hit the thumbs up button. Thumbs up, thumbs up, thumbs up, share, subscribe. All right, number four, the number four factor is inflation. Inflation is a significant problem right now. They keep thinking they've got it under control. It's kind of the wild bull where they're trying to lasso it in. And there are some people who believe that they might actually slow down the inflation, that they're actually going to get it under control. And I've heard that analysis, but then there are some people who think it's getting worse. Target has released numbers saying inflation is getting bad. Walmart released numbers saying we didn't meet our revenue numbers because inflation, or we didn't meet our profitability numbers because inflation is getting bad. Home Depot has released reports saying inflation is getting bad. So ultimately, what they're talking about is on two fronts. One, they're talking about just their costs of raw materials, their cost of labor, their cost of everything. Then they're talking about their customers. Their customers have less discretionary income because most of their money is being spent on regular household goods. When you got to use your credit card just to eat and feed yourself, you're not going to take time to go on a vacation. You're not going to spend money on a new car. Right? So ultimately, that's what you're dealing with inflation. Inflation is the big beast that everybody's fighting against. Now, the one thing that was holding the economy together relates to number 5 on this list. Number 5 is corporate earnings. Corporate earnings have always been kind of the savior of this economy. Even when we had high inflation, the benefit was, even though we had high inflation, we also had high corporate earnings. So it's kind of like, she got pregnant too soon, but at least she had a lot of good sex in the meantime. Well, that one good thing, that good thing that you had, that good thing with corporate earnings is under question. A lot of people think the companies may not make their numbers next time. In the last quarter, you had a large, overwhelming majority of companies that actually surpassed their earnings expectations. Now you're having companies that are revising their expectations downward. You have some of the stalwarts, the powerhouses, the Apples and others that are starting to kind of look a little bit shaky. You have big companies that were just look like ATM machines that are kind of saying, whoa, we might not be able to really do what we've always done. That's a problem. That means your big horses are not necessarily able to pull the load like before, which increases the risk of a recession, increases the risk of not just a recession, but a double recession, which is called stagflation. Again, that's a slow economy with high inflation. You don't want that. That's a possibility. That's just life. That's how things work. Number 6, you've got a lot of companies that are now reversing. Before, you had a problem where there were too few employees and too many jobs, right? Because the economy was overheating and all this other stuff. Now, the other day, you guys saw on this channel, I did a video about Amazon, and Amazon laid off 150 workers. That's only 2% of their workforce, but that's a big deal. Amazon hasn't been in a layoff mode for a decade. Amazon hasn't been losing subscribers in a decade. They lost 200,000 subscribers this quarter, and I'd be curious to see what happens next quarter. I think that the loss of 200,000 subscribers might be an exaggeration, because one of the reasons Amazon lost so many subscribers was because they pulled out of Russia. When they pulled out of Russia, they lost 700,000 in Russia. So if you added Russia back in, it goes from negative 200,000 to positive 500,000. But that's a pittance compared to what Amazon is normally expected to do. They're normally expected to do 2 or 3 million new subscribers per quarter. But remember, high growth levels like that are not sustainable. You can't keep growing at that rate forever. It's damn near impossible to do. So it was only a matter of time before Amazon slowed down, because you can't. What are they going to do? Start signing aliens up? I mean, I know that Congress is having UFO hearings in the next week, or maybe they're going to sign some aliens up for Netflix or something. But really, you can't. I know. I said Amazon. I'm sorry. Thank you for correcting me. I said Amazon, and I meant to say Netflix. Netflix. Come on, boys. Come on. Get it right. All right. Thank you for correcting me. I appreciate that. I meant to say Netflix. But if you want to know what I think about Amazon, I think Amazon's a good investment right now. I think in this environment, Amazon's kind of the big ship you'd want to be on. So I do like Amazon as a stock. So my apologies for getting that wrong. Forgive me. All right. The last piece, here's number 7. Number 7 reason that number 7 factors kind of happening right now is investor sentiment. Investors are panicking right now. Investors are nervous. When investors are confident and feeling good, they're just, doing this. They're just making it rain. They're just out there, the way you feel when you just got paid and it's Friday night and you're super generous and you're paying for everything. You're buying up the bar, buying up the club, whatever. Well, think about how you feel the day before payday when your money's all gone and you're on your last couple of nickels. Well, right now, investors are kind of freaking out and panicking. They call it the wealth effect. The wealth effect is kind of kicking in. So a lot of investors are not feeling as loose and comfortable with investing as they should be. Now, remember this, Warren Buffett had an old saying that I really liked, where he said, you should be greedy when others are fearful and fearful when others are greedy. That means that you should be buying when others are selling. You should be selling when others are buying. So basically, what I would say is, or if you want to know what I'm doing, I'm buying a lot of stuff. I'm buying everything I can get my hands on, because I want to own as many shares as possible, because I believe for sure that at some point all this will pass. And when it does pass, it's going to work. It's going to be fine. But the problem is right now, your cousin Pookie, who's in the hospital, he's got a lot of stuff in his system, right? Pookie was hooked on dope. Y'all, you know, everybody got at least one cousin like that. He was hooked on drugs, so we're gonna have him in the hospital for a while to get the drugs out of his system. We're gonna get him out of the thug life. We're gonna rehab him, get him some education, fix him up a little bit, and that's kind of what you have with the stock market. You have a stock market that has been doped up with Fed money for 10 years. And that all that dope is going to have to run itself through the system so that you can actually have a cleaner economy. Your economy is a mess right now, long term and short term, because not only did they overpump money into the economy and create what they call asset inflation, but also remember, your government debt is now $30 trillion. So even though Pookie's going to be clean, he's going to come out of the rehab clinic like fresh off the dope with a healthy body, he's still going to have to deal with the consequences of the choices he made over the last 5 or 10 years. Well, the Fed is always going to have the consequences of the $30 trillion in government debt that we've taken on. That's not going to go away. It's going to go to 35 trillion, 40 trillion, 50 trillion. There will never be a time, in my view, in the next 200 years where government debt is going to go the other direction. It can only go up. I can't think of a time where it's really gone down. Maybe it has, but I don't know of that time. So ultimately, you've got some messy stuff happening. That's kind of what it is. Now, do me a favor, hit the thumbs up button, thumbs up, share, subscribe if you haven't done it yet. And also just a reminder, if you want to join us at the Black Wealth Summit, which is going to be in New Orleans during the Essence Fest, we're going to cover real estate, stocks, and getting your business off the ground, 10x in your business. That's what Lene Javette is going to be there for. She's a startup specialist and also a strategist. She's really good at what she does. Feel free to go to boycewatkins.com. You can look for the passes over there. You can also do a free trial of my stock market investing class or get lots of free stuff. So feel free to go to boycewatkins.com and take a look. All right, so a couple more things. One, Jeremy Grantham says that this is the worst bubble. Jeremy Grantham is a really smart guy. He's 83. He's been around for a long time. He's seen a lot of different situations, and he's kind of like an old school football coach who's played in a lot of different types of games, a lot of different types of styles. So he knows what's going on right now. He can compare it to history. Grantham says that he's seeing signs that this bubble is worse, or it's bad or worse than the bubble of 2000. He said the main difference between now and the tech bubble of 2000 is that in the bubble of 2000, which was horrible, by the way, it was absolutely horrible. It almost killed Amazon. Amazon almost died during that tech bubble. It was crazy. And he said the only difference was that the markets were kind of segmented a little bit. Like when the stock market crashed, it didn't bring down the housing market and other markets with it. In this case, all that stuff could come tumbling down. What he's saying is that this could be the beginning, that this could really get even worse than what it is. So I just want to remind you, don't go in buying expecting that everything's just going to get better. And what's going to happen is you're going to get a lot of false flag scenarios like you did yesterday. You're going to see happy days, the sun's going to come out, everything's going to be shining, and it's going to look like the market's on its way back up again. And it's going to say, oh, psych, sucker, sorry. So actually yesterday when I saw the market take off, I didn't make a move. I just sat there. I said, okay, you know what? I don't think this is going to last. And today it plummeted again. So everything you gained yesterday disappeared. And you lost even more than, or we lost even more than that, because I'm in the same market as you. Now, one thing you may want to consider is if you're interested in moving over to safer assets, so you want to shift your money over to something else to protect it or whatever the case may be, maybe on those days or those weeks when the market does kind of show some signs of life, maybe that's a time to go ahead and sell a little bit, take a little off the top, or maybe pull some cash off and put it to the side to protect you and give yourself financial security, because I think you want to really make sure you think about all these things as an investor. Now, the stock that I love right now, I really like Uber. I bought a lot of Uber stock today. I also bought a lot of NEO. I like NEO and Uber. So if you want to know a couple stocks that I like that I bought, Uber is one. I just have reason to believe, based on my research, that Uber is a good long-term investment. I also added some NEO in my portfolio also. So that's what I did personally. I'm not telling you what to do. This is not investing advice, but this is what I did with my money. So I hope this was helpful. I hope that you guys understand what's going on a little bit better. It was wonderful seeing you as always. And just a reminder, of course, you guys know, if you want to teach your kids about wealth, we have excellent financial workbooks for kids. We're getting some flashcards back in pretty soon as well. So feel free to go to financialworkbooks.com if you'd like to teach your kids about economics. It will get them ahead of the curve. I cannot overstate to you the importance of teaching your children about economics early. Do not put them on the slave path, on the corporate plantation path. Do not put them on that path. Let them get a job if they want to, but teach them how to build real wealth and how to make real money, not how to just go work for people, because that's not a good move for Black people. We have to think better. And part of being B1 means preparing for the future. So get it done, get it done, get it done. All right, guys, have a good day. God bless you. I love you. And it's wonderful talking to you. If you can hit the thumbs up button on your way out and also subscribe, I'd appreciate it. And I'll see you guys soon. Take care now. Peace.